Hey everyone, in today's video, we're going to look at one of the most important concepts of technical analysis. Now, this concept alone is enough to, trade using technical analysis to time entries in stocks which you think are really good and which has the potential to go up. Now, concept is called, support and resistance, or in most sophisticated terms, it's called demand and supply. Right now, all of us understand what is demand and supply, but when it comes to markets, it's a little bit different in terms of identifying these points at which stocks have support, at which prices stock have resistances, and how do you plan and your entire trades. Now, I'm sure most of you are excited, but before that, don't forget to watch the other video that I posted this week, which is analysis on Satya Industries, SPIC, and SIS, all three fundamentally excellent companies, and the link is in the top right corner. Don't forget to check that video out. Okay, and don't forget to hit the like button in case you liked all my videos. This video also, I'm sure you like it, especially if you're a beginner. This is going to be the very first video that you should look at when it comes to technical analysis. You don't have to read any books. This could probably be the first place where you start. Okay, so without wasting more time, let's look at what this support and resistance means in terms of technical analysis, and how to spot them, and and also how to know whether this support and resistance is a significant one or not, and whether it will work out or not. And how do you know what is the confirmation point of this support and resistance numbers that you have, and what is that point where you can also make entries into a stock. Okay, so that's the agenda for today. Let's look into the video. So I'm going to use TradingView. I've blanked out the charts, and I'm going to explain you in terms of price what support resistances are and how does it relate to technical analysis. So in case you're not aware of this, you can also use this brush here just to do some drawings or whatsoever. So let's say you're looking at a price, right? Now let's take the example of YesBank. Now YesBank, initially after the IPO, it had a very strong trend up, right? The stock literally went like this, and then the stock might have consolidated for some time, and then it went higher, and then higher, and then it started dropping. Right now, this is how trends work, right? So in a stock, when you see this is the trend of the stock, the trend is overall an uptrend. The stock keeps heading higher and higher and higher. But what is that point of support and what is the point of resistance that we're going to talk about today? It's pretty straightforward and it's pretty simple. All you need to know is what are the price points from where the price reverses, right? So you have points from where the price reverses to downward, and from where price reverses and heads upwards again. Now these are the points that I'm drawing here are the points of inflection from where the price moves up, where the price goes down, right? So even in charts, when you look at charts also, you would see similar points from where price kind of reverses and heads higher, and where price heads lower. Now the points from where the price is reversing and heading higher, right? Now this point, the price went all the way up, it came down, and this point where the price is reversing, this is called the demand zone, right? So it's a simple, straightforward technique to identify the points of demand, right? So every point you see here, this one is point of demand, this one is a point of demand, this one is a point of demand, and this is a point of demand, right? And since then, then the price starts coming down again, it heads higher, so that's also a point of demand, and that's also a point of demand because the price went higher. Now after that point, now the price starts heading lower, right? So now every time the price, so even this is actually a point of demand, right? So this point here, this point, all these points are points of demand. So I'm going to remove this. So the point from where the price is reversing is called the point of demand. Now there's another term for this, which is also called support, right? So demand or support mean same, and both can be used alternatively. There is no there's no major difference between demand or supply. It identifies the same point from where the price reverses. Now the opposite term is called resistance or supply. Now I'm just going to mark it here, supply or resistance, right? A lot of you would have heard this term online, the points of resistance and point of supply. Now the point of resistance supply is the point from where the price drops, right? So from there the price drops and heads lower. So that's the point of supply. This is a point of supply. This is a point of supply. That's a point of supply. That's also a point of supply. And then you have more points of supply here, right? So this is also supply. Then you have supply here, right? Now all these points are inflection points from where the price turns around and heads lower. Now, just to give you an example, right? So in a house, we have a ceiling and we have a floor. Now, floor provides support for you to stand on, right? Now, that's a simple and easy way to identify what is a point of demand, right? So since the floor provides support, uh, so you are able to stand on the house, and that's the same thing what's also happening here. This price level over here provides support for the price, and the price is able to head higher. Now, alternatively, what you can also think from a technical analysis term is, this point is also a point from where there's so much of buying that happens that the price heads higher, right? There's so much of buying, and the balance between the buyers and sellers is so that the buyers are more and the price then heads higher. And this also is a point where the buyers are more and they start bidding a higher price and the price starts to head higher, right? In a similar way, the resistance or the supply zone is the ceiling of your house. So obviously, if you have to break your ceiling and go higher, you need a lot of power. So, and that doesn't occur, and that's why the price drops. So you can also call that here as a resistance. So resistance is nothing but the ceiling of your house. If you have to really break that and head higher, you have to really break that with a very, very strong hammer or very, very strong tool, because of which you can move to the next floors on the top. Right? The same thing here. You need so much of buying that happens that it breaks the resistance and then it heads higher, and then there's a new resistance which forms. Right? And also, this is also points where people are booking profits because of which the price drops, and here people are buying because of which the price heads higher. Right? Now, this is a very straightforward concept of simple demand and resistance zones. But sometimes what happens is you might not always have such a trend, right? Now, sometimes what happens in markets is you might have sideways movements like this, right? The stock kind of goes sideways like this, it keeps just going sideways. Now, even in this, what you can see is a very clear base, right? So a very clear base is called also point of demand or points of points of support or points of demand, right? So from where the price reverses and heads higher is called the demand zone. So because there's so much of buying which is happening, the kind of price heads higher. And then you also have this level over there, right, which is called the point of supply or resistance, because of which the price heads lower. So you can also find this in charts like this, and you can also find this in charts like this, right? So in both the places, what I've looked at is at which point the price is reversed, and what is causing the drop and what is causing the resistance. Now, with that in mind, I'm going to take the example of YesBank, and I'm going to show you in YesBank what are the points of supply and demand, right? So let's take a look at YesBank. Now, if you look at YesBank here, so if you look at YesBank here, so this was IPO price here, and then again the price kind of reversed from the IPO, right? So if you look at this point over here, this is the point of demand for YesBank. Now, if you look at this point, every time the price goes up and it comes down, what's happening here, technically is that a lot of people who have bought and missed the IPO are buying the stock again at the same price levels. And now that's exactly what's happening after many, many years. Around the same level, there is again demand coming for YesBank, right? So let's not make a mess of this chart. I'll use a simple rectangle just to show you that levels, right? So this level here is again acting as a point of demand, right? After many years, again, a lot of people are buying the stock around this zone, right? Now that's called the point of demand. Now, why do people buy? Because they find value in the stock and they buy the stock, because of which it heads higher, right? But then there is also points of supply. Now in YesBank, this here is the point from where it rejected and came down all the way down, right? So that becomes a major point of supply, right? So that point. Now check what happens, right? So I'm just going to also explain, I'm just going to extend this rectangle here. Now, because people found value here, the stock has gone up, right? But also remember, the points of supply are also points where people have bought stocks and they are stuck. For example, a lot of people bought stock around here, and when price comes down, they're all in losses, right? So all these people, who bought here, they are all in negative, right? So they're all down. And when the price goes up again, now what's happening is a lot of people who have bought here at this point are also selling at this point, right? Because of which the price kind of consolidates or doesn't go up quickly. And also people who bought here are seeing their money back. Now, just think, we'll pause for a moment and think what happens to your portfolio, right? When you bought a stock today at, let's say, 10 rupees, and the stock dropped to, let's say, 5 rupees. Now, in your mind, you invested 1 lakh, that 1 lakh has become 50,000. Now this 50,000, it's very important for you to recover that 50,000 and make it 1 lakh again. Now that's a typical psychology that all of us have. We want our money back, and that's because we have put some money, and that money was planned for something else, and that money has gone down, and we want that money back. Now that's exactly what's happening here. When this price comes back here, these people who bought here are also booking, are trying to come out of the stock, and people who bought here are also booking profits. And then what happens here is, since a lot of people still see value in this company, that selling which is happening here is getting absorbed, and the price heads higher, right? And then again, you see this price comes again lower to this point, and then it kind of consolidates, right? Now this is called the point of demand, right? So at this point we said it's supply, but once the supply zone here is complete and the price heads higher, now that level comes back again and price starts reversing from there again. Now why this is happening, right? So this is happening because a lot of people who missed to buy around this level, when it comes down, find value again, and they buy the stock again. So just keeping it simple, all you need to know is what are the points of inflection, right? So that's the first point of inflection. Then you have next this point of inflection, that's a supply. And then you have next this as a point of demand, because its price went up. Now you also want to know again where the price is reversing, right? So again, you mark this point as point of supply, because the price is reversed from there. And then you also mark this point as a point of demand, because price is reversed from there. Now what we have done is we have marked demand, we marked the demand zones, and we marked the supply zones, right? Now, how do you know that this supply or demand zone is very significant, and it can probably make you some money, and the price might not go below that? So when there is multiple times a stock reverses from the same level, that's considered to be a very, very significant demand zone, right? For example, this point here, it reversed twice, so now this becomes a very important zone, right? Now look at this zone in 2005 and also in 2008. Now after 12 years, right, the stock is again coming and reversing from the same zone. Now that's called demand. That's why people say markets have memory, and the primary reason is because a lot of people who bought the stock back then, who have big profits, are now seeing the price at the same zone, and they find the value in the stock, and that's why there's been a lot of buying happening in YesBank around this price. Right now, that doesn't mean that you have to go and bet on YesBank today. Probably it's up to you, but I would say you can still keep a stop loss of around 10 rupees and go and buy YesBank today. Allocate a very small amount to see if it heads higher, and then if it heads higher, then well and good, you might make some decent money going forward. Okay, now same thing applies for supply, right? This point supply was here, and then now you see that supply zone which acted as, so if you see there was a drop for 2 months, and then the price started heading higher, and the price started again reversing. Now since this price reversed multiple times from the same point, now this also becomes a very important demand zone, right? Now also one point to note is, since a lot of people have sold here, right, and it goes up and comes back again, and a lot of people have bought here, they again buy, and because they find value in the stock, and then the stock heads higher, right? Now I'm going to repeat this again here. So this is another point of supply from where the price dropped, but you see how it reversed again, because there was a lot of time the stock spent around this range hovering, and then it went higher. So which means that this point becomes a very important point of significance, right? So rule number one is, there's only one rule. If you want to find a proper demand and supply zone, ensure that the price has been around that level at least 2 or 3 times, which means that's a very, very good important zone. And longer the duration the stock spent around that time, the better that particular support or resistance zone is. So then the price came over here, then it came down, then it went all the way up, right? Then it again came down. Now this zone also becomes our new demand zone, right? But now compared to this zone and this zone, which is more significant, right? So this is more significant zone. And just extend this point here, and you would see when YesBank dropped all the way down, it kind of reversed and went higher, right? So there was some time it spent around that zone, because a lot of people who bought here, they made a book profit somewhere, and they found value, and they bought the stock again around this level. But then unfortunately the stock continued to drop because the supply was more than the demand, and again now it's finding support around this level, right? So just extending this to this point here, and again I'm extending this point here, and if you see, there was also a zone around this zone where there was demand, right? So price went up. Now in this entire move up, right, so there are always buying happening, and the buying and selling, demand and supply, has been always on the demand side, right? You see the previous levels never got never was broken down, right? So every time the stock went higher, the lows also went higher, right? So every time this low, you look at this low was here, then the low came here, then it made a higher low, and a higher low. Now, what do I mean by higher low? Higher low is nothing but this low over here is higher than this low, right? So every time you see, the point of low increases, and that's how you form a trend. Now, just explaining that a little better. So in an uptrend, you have these points, your lowest points in the trend and the highest points in the trend. So when a trend is forming higher high, when every high is higher than the previous high, you call that as higher high, right? And when every low is getting higher and higher, you call this a higher low, right? So higher high means every high is higher than the previous high, and higher low means every low made is higher than the previous low. And that's what is forming here, and YesBank is kind of going in an uptrend, right? And then what happens is, at this point it goes up and then it kind of breaks down. So that's the point of supply. There's too much of supply there, and that's why what happens is this structure breaks down. Now the stock kind of breaks down from there. If you see, there's a big red candle, and that's the end of this long-term uptrend, right? Now that's when the entire concept of demand being more than supply is changes, and now supply becomes more than demand. So what's happened here is it gone up like that, it went up like that, and then it kind of breaks down, right? So that point is the point when the supply gets more than the demand, and then the stock starts a new downward journey. Now remember, you need to have this kind of a trend for an uptrend, and moment you have this kind of a trend, this is a downtrend, right? You do not want to be in stocks like this, and you want to be in stocks which are going up like this. Now that's one of the simplest ways to identify demand and supply zones. I'll just conclude with this short summary. You want to find points of inflection, right, from where the price is reversing, and you want to note that those points are points, the most significant that zone is, how many more times. So the more number of times the stock has reversed from the zone, the more significant that support is going to be. Okay, I will take a few more examples before I finish off this video. Now I'm going to TCS to find these zones. Okay, I'm taking TCS chart, and TCS chart also has a similar kind of a reversal, right? You see this IPO zone, and stock went all the way up, came down to IPO zone and reversed, right? So that was inflection point. Then we had another zone here, the previous high here, which was the supply zone, and the price overtook that supply zone and went higher, and then it came down and went higher, right? Now again here you see price was going sideways for some time, and then it started heading higher. Then again you see this zone was a point of supply because the price couldn't cross that level, but once it crossed that zone over here, the price again started heading higher. Then again we had a zone of supply, the price couldn't cross that level, and once it crossed, it went higher. Now this happens in stocks which have really good long-term story. These kind of trends are very strong, and it just keeps heading higher. But on the other side, you also have stocks like Suzlon, which have not done really well, and which have been which kept going lower, right? Now if you see this point here, the stock went up, came down, it went up, it came down, it went up, and now this is the point of supply, right? So that's the point of supply demand, because the price came here and went up. Now previous to that, this was a point of demand, and previous to that, this was a point of demand. Now you have this trend which is clearly up, but then what happens is there's a change in that trend when the stock suddenly starts going down, right? And then you have this lower highs and lower lows, right? And then the stock kind of keeps going in a downward trend. So you want to identify these kind of points and exit the stock at that point, because the stock is now starting a long-term downtrend, which at that point might not sound like it's going to a long-term downtrend, but if you have held Suzlon from that point, still now it's in a downtrend, right? Now the stock has gone down, and for the first time it is now in an uptrend after many months, right? It also has given a breakout of inward head and shoulders. Here at this point, there's inward head and shoulders breakout. In case you don't know what it is, there is a video link right on the top right corner. Don't forget to check it out. That will help you understand what is inward head and shoulders. So for me, right now, Suzlon is breaking out from a long-term downtrend and heading into a probably long-term uptrend from here. Now, how fast that will be, no one knows, right? But what you want to know is you do not want to be holding stocks which are in this kind of a trend, and it's just a waste of time and waste of opportunity costs. You can find and move on to other stocks, right? So there's another stock which I want to talk about is Nestle. So Nestle India also has been in a very strong uptrend, right? So if you see Nestle, we've had this strong uptrend, and then it came down, it went high, came down, it went high, came down, and then it just kept heading higher, right? So now in Nestle, what you want to see is what is the point of inflection, right? So this was the lowest point, right? So that was the lowest point when we had demand, and then stock went one way up and it kind of reversed from that zone there, and then this was the zone where it reversed from the bottom, right? Then it went higher, then it reversed from there, it came down, and then it reversed there. Now if you look at this point, this people who are stuck here, who bought here at this point, are kind of selling, and this forms a major demand zone, right? And then the stock spent almost 3 years around this zone, and then the stock kind of had a breakout, and then it again went higher, and then it spent some time again here, there was supply, and then it again broke and went higher. So one simple rule that I want to tell you today, or the takeaway from today's video, should be that a stock which goes like this, right, and which has a similar point of demand again and again and again. Now that's one point where the price has reversed multiple times again and again. Now you want to buy stocks when that zone is taken out, right? So a stock which is going like this, so that point is the same point, right? So when a stock breaks that level and heads higher, you want to buy it at that point so that you go immediately in profits. In 1 or 2 months you'll be sitting in profits, and then you can ride that long-term trend. And the other way around is you do not want to be holding stocks, which are going like this, and then it breaks down from this point, right? That should be your exit point from there. You should not be holding stocks which are going down. So I want to conclude that with that short conclusion: do not hold stocks which are going down here like this, and do not hold stocks which are heading higher. Now what I want you to do is look out for stocks that I posted on Twitter, and there are a lot of stocks that I posted on Twitter which have similar kind of demand supply zones which I've identified. One of the recent examples was Mirza International. Now there was a Twitter thing that I did, and if you see, the stock had this zone over here. When it broke out, it had a one-way move up. Also, I posted a video on Sharda Crop which had a similar kind of a zone, where I identified that zone, and the stock, once it broke out from that zone, it just had a wonderful 70-80% move, right? So you want to find those kind of levels and buy at that point so that you are sitting immediately in profits, right? So that's a short video today that I did, I spoke about demand and supply. Now these are very simple techniques, and it's one of the most simplest techniques in technical analysis. So you might really find this very interesting, and if you do not know how to use this, maybe go through my Twitter. There are a lot of charts which I posted with lines which show what are the demand and supply zones, or demand and supply zones, or support and resistance zones. So go through them, you might find and get some really good idea. And I hope this video motivates you to go and check out some of the books. One of the books that you want to read is technical analysis of stock trends, or technical analysis explained by Edwards and Maggie. So that book is a really good book, and it can help you identify this, understand this more in detail. Okay, so that's one book that you want to buy today and start reading that book. So I'll leave you here, and I hope you did learn something. And do let me know if you're practicing how to identify demand and supply zones, especially if you're a beginner. Probably this is that video which can help you start that technical analysis journey. Okay, so thank you. Stay safe, stay healthy, and don't forget to watch my stock video which I posted this week. I'll leave you here. Take care until I see you in another video. Bye-bye.